say building a house and running all the expenses for that through your business. Intermingling personal expenses and business expenses is definitely, red flag. In a sense, it is not compliant with current federal and state tax laws and highly not recommended. So one thing that our business tax management services will provide for our clients is to keep you compliant. If you were audited and it was discovered that you were, funneling a lot of personal expenses through your business, that audit's going to hurt. The results of that audit are you're going to owe a lot of money, and it could be even worse than that. We are, we advocate for our clients to be compliant with all federal and state tax laws. And so the strategies that we recommend line up with those laws. Those strategies are in the laws in a sense. And yes, if you are getting your business ready to sell and you have been funneling a ton of personal expenses to drive your business profits seemingly to zero, then it is going to be harder to sell your business for any type of money, any type of good price point, because you're intermingling personal and business finances. And it's going to be hard for that searcher, that prospective buyer of your business to determine what, when they look at your bookkeeping, it's going to be hard for them to determine what is personal expenses and what is business expenses. So they're definitely a lot less motivated to give you a good price for your business. And if you got audited by the IRS or your state, if your state assesses income taxes, and they see a lot of personal expenses flowing through your business, and those personal expenses wound up as actual expenses on your business tax return, then they're going to take away a lot of those business expenses and charge you back taxes with penalties and interest. And, so we would definitely tell a client that if they were doing that, tell them to stop, explain to them the consequences, and help them unwind all of that going forward with our bookkeeping services, et cetera. Get it all split out so it's compliant and it's better for everybody going forward.
And I was going to say, on top of that, is that if you're co-mingling, talk to a lawyer. We're not lawyers. I'm not a lawyer. You're not a lawyer to my knowledge, are
Not a
you? Right?
lawyer.
Okay. But you also could allow someone to pierce your corporate veil if you're sued because you're commingling. So understand that when you're doing this stuff, it's not just a tax risk. It's like if something happened and someone sues you before you exit, before you do anything, then all of a sudden your personal assets could be at risk as well. So it's really risky, and it sounds good because you save this money on taxes, but the risk is really, really high.
Absolutely, yes. If your business is subject to a lawsuit and they find a lot of personal expenses in your business bookkeeping, and that those business expenses wound up as tax deductions on your tax return, because they're going to get all that information in the discovery phase of the lawsuit. If that is discovered, that you're basically intermingling personal and business expenses, yes, the corporate veil is more easily pierced, and it's not going to be good for you in the long run. So it is just not worth it to intermingle business and personal finances. I know you can basically get out of paying taxes, but you're breaking the law. And, if you do it too much and you go under audit, the consequences will be worse than just paying back taxes. And you just don't want to deal with that. So definitely get compliant ASAP. That's my advice. It is so worth that investment to where you can sleep good at night. You don't have to worry about anything happens that way. If you go under audit, you're confident in your numbers. That's my goal for my clients. If you get sued, you're confident in your numbers. At least on the finance and tax side, they can be confident in their numbers. My clients can. And so that is a great question, or a great item to note there for sure.